Gold prices have been trading range-bound for weeks. When are investors finally going to see a break? Joining me today is Todd Bubba Horwitz of BubbaTrading.com. Bubba, welcome back to the show.
It's great to be with you, David. It's our first together, and I'm happy to be here.
Yeah, we've had you on Kitco for a long time now, and we've always appreciated your thoughts, so thanks as always for being here. Gold prices have seen sideways action for almost 8 weeks now, trading mainly around the $1,700 to $1,750 an ounce range. Why has volatility been so low for gold?
Well, I think what you're seeing is, the price pattern itself suggests that we're stuck in a consolidation pattern. And, we are in those tight ranges. We've had an attempt to break down below 1675, which would be key to the downside. And we've had a couple attempts to get over the 1800 level, and we just haven't been able to do it. So really, you've got the ultimate confusion in the market. And there's people trying to understand, is the currency, is the gold going to turn into a real currency because of what the Fed is doing? All kinds of information. But at the end, it comes down to price. And price says that right now we're in a state of confusion. However, still in an uptrend unless we violate 1675 on the downside.
Okay, I'm going to come back to your price trend forecast in just a minute, but let's go back to what you said earlier, confusion. What exactly are people confused about? Do you think prices are not really reflecting reality right now?
Well, I don't think prices ever really reflect reality, David. I got to tell you something. I think that, you get excited and you push them up too far, and then you get a little bit upset and you oversell them. And I think that's kind of the pattern we're in now, is nobody's really quite sure. And which is why, when I'm looking at a market, I really don't care what the outstanding or surrounding news is. I only look at the price action, because to me, the price will tell me if there's any news worth trading, because typically the market will anticipate that ahead of time. That's what we saw earlier when gold made the big burst up, and now we're trying to figure out which way is next. And I don't think anybody really knows, including me, except that my algorithms are long and I'm long with them.
So what are the prices telling you right now?
Right into this morning was very scary, for the longs, and there was a good chance it was going to break down. But subsequently, they've come back and they've rallied it, and gold is now back up in August, which is what I'm trading right now, is trading 1720, which is a far cry from the 1690 it was a few hours ago. So it looks like some buyers have stepped in. And again, if it breaks below, I would be very concerned. But if we can stay in this, at least in this consolidation, I think there's a better chance we'll break to the upside.
There's a lot of optimism in the markets right now, especially on the risk assets front. Is that warranted, do you think? And is that the reason why gold prices are being held back?
It could be why gold is being held back. I don't think they're warranted. I think that we're well over our skis, as they say. I actually texted out to my members this morning that I wouldn't be surprised if these markets would turn lower. And that's when the S&P was up about 40 points and the NASDAQ was up about 100. Now we turned around and went negative. Now we're back positive, with the exception of the NASDAQ. But I think we're far too overpricing the hope that we're going to get by reopening the economy, because there's still going to be too many businesses that aren't going to survive. And unemployment is not coming down so rapidly without the small business. And I would say probably 25 to 30% at least of small business is going to be destroyed by the time this is all said and done.
Now, there's a lot of optimism, like I said, and a lot of people are, optimistic about the fact that businesses are reopening. But if you actually look deeper, Todd, is that businesses are reopening, except at a lower capacity than what we used to be. Are you seeing that in Chicago, where you're based?
Well, I think it's going to be the fact all over the place, David. I think, other than, some of the very remote areas, like South Dakota, which never closed. But overall, we're going to see a drop in business. Now, the real question is all the investors and has all the big money priced in the beating that earnings are going to take? Because, again, you said it yourself. You've got restaurants that can only take 25 to 30% of capacity. So where's their profit going to be? Where is the bottom line going to be? Yes, some companies have been able to remain open through this. Service industries that can be done from home and on the phone, they won't have a problem. But a lot of the businesses that require customers are going to have a little bit of a problem. And again, that's going to create less jobs. So again, I think we're a little bit too exuberant here. I do believe that it'll be fine overall. But for now, I think we're probably a little bit too far than we should be.
I think where stock market bulls disagree with you, Todd, is that they're saying, well, the Fed's printing a lot of money, more than they've ever done in the history of the United States, and that this is really only going to drive liquidity up in the markets, which is really going to fuel a risk appetite from investors. So really the underlying fundamentals of the economy don't really matter as much as what the Fed is doing. Do you agree with that view?
I 100% agree, and I think the Fed is whacked. I think, of course, they're basically clueless when it comes to the actual free market system. They're too used to manipulating and trying to get price. But again, at the end of the day, what they're really doing is they're destructing the dollar, and they're going to create, at some point, we're going to get hyperinflation out of nowhere as they continue to try to manipulate around here. And I think that's another problem. And again, when you look at what they've done to create all this liquidity, which they have not done. We don't have liquidity in markets right now. Markets, one of the reasons we're getting these bigger swings in markets is the lack of liquidity. And now you take in consideration many of the trading vehicles that allow you to use margin are raising their margins, which is cutting out all the small investors. So liquidity is a big problem here, and they are not doing what they think they're doing. They're creating a bigger problem down the road and forcing everybody into the stock market, because where else are you going to go for any kind of return?
I've read a lot of reports saying that this may actually be the fastest recovery from a bear market back into a bull rally that we've ever seen. And I've also read reports that would say the exact opposite. Where do you stand on this debate?
Well, I mean, it's been very fast, but I think, one thing we have to remember, markets, like everything else, change. I mean, we've got, the speed at which information travels, the speed at which everything gets done changes the dynamics of markets. You can't compare today's market to 50 years ago. We didn't have the technology. If you go back to the Cuban Missile Crisis, it was at the White House 2 weeks before the world ever knew about it. So again, now if somebody burps in Europe, you know about it in Canada in 5 seconds. Again, it changes the dynamics. So the speed of the market is the speed of the market, but a lot of that has been caused by markets that are less than liquid, which creates more air pockets and more big moves than are warranted.
What about the fundamentals, Todd? You mentioned unemployment just now. When are we going to see employment return to pre-COVID levels?
Well, that's going to be a long, long time. I think it's going to get better. And listen, I'm a believer. I do believe that we're going to get better. I think we're going to survive this, and we'll be fine when it's all said and done. However, if you just start with one industry, the sports industry, with no fans, no vendors, no people. Look at all the people that they employ, that their whole lives are depending on working venues. So that's out for at least 6, 7, 8 months. Who knows when we're going to get fans back? Concerts, restaurants, bars, that's a lot of money and a lot of revenue that we're not going to see for a long time. So again, I think it's going to take a lot longer to get to pre-COVID or get to pre-COVID levels of jobs. Years. We could get down, let's say, under 10%, under 8%, but to get back to the 4s and the 5s, not for a long time. I don't care what they do. There's not going to be enough places to put people that work.
So going back to gold prices now, you've mentioned consolidation at these levels, and we've been consolidating for quite some time. If you look at the longer term trend over the last year, we've already gone up 33% in gold prices since last May. You could argue that in the past recessions, we've seen gold climb multiple times, not just 33%, triple digits. Can we see that this time?
Listen, anything's possible, David. I'm not a guy that's going to go out there and say we're going to go to 3,600 or 3,000. I think, again, if we can get through 1,800, I think it brings in the all-time highs, which is the 1,900 and change level. And then if we can get through there, again, I think someday gold will probably be, 3,000 or 4,000. But again, remember, markets go up just based on, the inflation aspect and other things around it. I think gold looks good. As long as it stays up here, I want it to go higher. But for me to say it's going to go, to 3,000 or whatever, right now I'm focused on trying to get it through 1,800. And if we can get it through there, then I'll be looking at 1,900.
Okay. What about silver prices, Todd? We've seen the gold-silver ratio come down from historic highs of near 120. They're down to about 98 today. They've been on a downtrend for the last 3 months. Where do you see silver prices headed from here?
I think silver looks a lot better than gold right now. I think when you look at silver and platinum together, they look almost identical. But I think you finally have found some buyers to step in silver. They just, every opportunity of silver is sold. Now you're starting to see some action. I think it looks really good. I think it's a good opportunity to be in. And I think obviously your risk reward area here is fine. So again, I'm a buyer of silver as long as it can stay really plus 17. I think silver looks great, and I think it will continue to perform, and I think it will continue to close that ratio. I mean, obviously, we used to talk about the ratio when it was 80 was a big deal. Now, 90 something, well, no big deal, right? I mean, so again, I think silver will be fine. I think it will run that ratio much tighter once it gets going.
We've seen in the past silver outperform gold on many occasions. Can we expect the same thing here?
I think so. I think again, remember, it takes a while to get a market going, and once it gets going, I think there'll be a lot more money floating in, just because it's a less expensive, a metal. So it's easier to get into, more people can participate in it, and more people can get to it. So, but I do think it will go up much faster once it gets going. And I think it will obviously close the ratio. But I think, if we see a 10% move in gold, then you can see a 40% move in silver.
You've just hit the key there, Todd. It takes a lot to get a market moving. What is it that investors, metals investors, need to be watching before we do see that move, and what is it going to take?
Well, I think really it's more about price and how the markets react. Again, I'm not a believer in, what the exact news says. I think, again, the market will play out as it should, and it will find its levels. And I think there will be buyers coming in to the silver market once they realize that it's finally starting to show some support. Again, when it comes to news items, I really don't watch them because I think they mislead. And typically, the markets are far more efficient at pricing in news items well before they ever hit the street. And if you're watching price, you can see that happening before you hear about it anywhere else.
Last question I have for you, Todd. A lot of analysts we've spoken to recently are still constructive on gold and the precious metals, even though, like we talked about earlier, there is a lot of hope and optimism on the risk asset side. Is gold really not behaving like a hedge against risk now? Because if we're, by definition, if we're bullish on both, that can't possibly mean that we're hedging ourselves properly, are we?
Okay, well, number one, I don't believe gold is a hedge. Let's get that clear first. Gold is a hard asset. It's a commodity. Okay, again, it's a good commodity, and I believe that everybody should have some ownership or some representation in any investment that they make. But as far as hedging, it's not going to hedge anything with the exception of potentially currency. Okay, so again, if you want to hedge against currency, great. And of course, with the Fed devaluing currency, that's obviously it's a nice place to be in gold. And if the Fed goes to digital currency, then gold becomes even better. But I think the price action looks fair. It did look a lot better. It is coming down, but if it can hold here, then I think it can look great. Again, markets change back and forth, and that goes back to that price we talk about. I believe that we're going to go higher, but if it breaks below, again, 1675, I think you better look out. I think it goes a lot lower than.
Great points, Todd. Thanks for being on the show today, and I look forward to speaking with you a lot more later this summer.
Thanks, David. Great to be with you.
And thank you for watching Kitco News. We'll have much more for you, so stay tuned.